we can compare gold's rise with a lot of different markets, and we can see that it actually is its move has not just been isolated, it's actually been pretty coordinated. We see in the left chart, you see a ratio between gold to U.S. long-term bonds. Usually, many times, gold and bonds can tend to move with a safe haven demand together. But if you actually see, for the past 20 years, gold has actually outperformed bonds. And even though since 2011, during gold's bear market, bonds have outperformed gold, you can see that right now they're actually bottoming at a key level that has been key for the past almost 15 years. Although this doesn't tell me that this is a floor for gold, it tells me that the future will most likely favor gold over bonds. This is not something you should forget. This is something you should take in consideration when you're positioning or buying new positions in your portfolio. On the right-hand side, we also see gold relative to oil. Also for the past maybe almost 20 years. You see that gold has outperformed crude oil. If you actually take a look at this chart and you break it down into segments of time, actually whenever there has been a robust resource or there has been a strong economy, resources, crude oil, specifically in this chart, crude oil, has outperformed gold. And it has been during times of uncertainty that gold has outperformed crude, even though they both rise, even though gold has risen on a secular basis. Again, it's not all about fear. Because crude, many times the different fears that make gold rise many times also make crude rise. And you still see that the gold has outperformed crude. Another big chart that tells us about this secular move in gold, the secular up move in gold, are actually gold shares. We all know, it's no secret that gold shares have been top performers this past year. They've outperformed pretty much every other asset class in the market. But what is very important, and the point that I want to make across with this chart, is that when gold or precious metals tend to be strong, whenever they're in a bull market, short-term, intermediate, or even long-term, okay, gold shares tend to outperform gold. This is very important because this has not always been the case. If you actually see a longer term, this chart that goes back to almost 20 years, you can see that gold has grossly outperformed gold shares with certain exceptions. You see, for example, in the 2008 bottom, that actually from that bottom up to the 2011 highs, gold shares actually outperformed gold. And then, back in 2015, when gold bottomed at a secular level, we can actually see gold shares starting to rise, with the big exception that downtrend since 2011, the ratio has actually broken to the upside.